Hello and welcome to another episode of the Opportunity Podcast. I'm your host, Greg Elfring, the head of marketing over here at Empire Flippers. And today I have a very special guest. We have Rob Walling, the legend of the micro SaaS community. He runs the conference MicroConf. He also runs TinySeed. He's bought and exited multiple businesses, including a quite famous one from years ago named Drip that he sold to Lead Pages. So in this podcast, Rob and I talk a bit about his career, his trajectory, and we get into his new book, The Exit Strategy, where he talks all about the emotional aspects of selling a business, which you may hear that and think like, nah, just give me the money, right? But in all honesty, like I think this is actually more important than the actual deal structure you do for your business. So we talk a lot about that towards the end of the podcast and a lot about what TinySeed is as well in the middle of the podcast. But I think you're going to get a lot of cool insights from Rob. I mean, Rob is a veteran bootstrapped entrepreneur. He's kind of been around the block many times. I believe he says there's over 200 companies in TinySeed at this point. So guy definitely walks the walk. You know what I mean? So with that said, I'll stop talking and we'll get into the wisdom that Rob has to share with you. See you all on the other side. All right. I have Rob Walling here, an absolute legend of the industry. We were joking a little bit offline how we first met a few years ago, way back in Vegas, which was a great time for me, right when I first joined up with EF. But Rob, for people who don't know you, why don't you introduce yourself? Where are you in the world and what is it you do?
Yeah, thanks for having me on, Greg. I really appreciate it. I'm in Minneapolis, Minnesota. I've been here for about 10 years, originally from California. And these days I run a couple things. Well, I write books. I just published my 5th book, but I also have the most popular podcast for bootstrapped SaaS founders. It's called Startups for the Rest of Us. Been doing that for 15 years and 780 episodes. And then I have a YouTube channel. Actually, this just arrived. My silver play button just arrived. Yeah, we just hit 100,000.
Congratulations.
Thanks. It was a lot of work, but it was great. And that's for bootstrap SaaS founders. And then I run an accelerator called TinySeed that we've invested in 204 B2B SaaS companies. And then MicroConf. These things sounds like a lot, but it's all one ecosystem, right? It's like MicroConf is education and events for bootstrap SaaS founders, which, you yourself have attended at least one of those events.
Yeah, I really like MicroConf. I think it's one of the more unique events in the whole SaaS world. So I have a friend, he just got into acquiring portfolios of SaaS companies. I was telling him like, dude, like one, I told him he should go to MicroConf, but I also told him that you got to be careful when you start like reaching out to some of these SaaS people who are like outside of your own ecosystem. They'll have like these visions of grandeur of what their app is worth. Like this one guy expected to get like, I think it was $1 million for an app that made like $2,000 a month for the last like 5 years. It's like a cleaning app. Like, dude,
that's great. I want to get that.
This is so like not real. Like who told you this? So wow, but this investment banker friend, like, well, he doesn't deal with these size of deals, right?
Yeah.
But yeah, I think MicroConf is a great event. So before we get into a bit of what TinySeed is too, like talk to me a bit about what led you up to this journey. Because you like I said, like you have a storied past, not just in the SaaS world, but like even a little bit before that. So what was your like come up story, Rob?
Yeah. So I started blogging in 2005 and I was just a software developer working a day job. And I realized pretty quickly that there was I wanted to start a software company. I wanted to start a product. I didn't want to work a day job. And the only path that everyone was talking about was raising venture capital, raising funding. That was the thing. I would go to these meetups about entrepreneurship and tech entrepreneurship and software entrepreneurship. And it was, well, where's your pitch deck? And I was like, well, can I just build a business? How about I just build a fucking business? So it really got under my skin. So I started learning more about it. And I had to go, there were no books on startup marketing. There was no Traction by Gabriel Weinberg, SaaS Playbook, whatever. So I went to the old internet marketers like the Dan Kennedys and that whole crew and the No BS Guide to Whatever. And I read all those books because they actually talk about marketing and copywriting and conversions. And so I had this small product called .NET Invoice, which was invoicing software. It wasn't even SaaS. It was like you downloaded it and ran it on your own web server. And I started applying the things from those internet marketing books to products. And then I wrote about it on the blog as I had success. And so this is 05, 06. There was no one else doing it. And Patrick McKenzie, Patio 11 started in, I think, 07. And then Jason Cohen and Peldy started a couple years later. So that was kind of my come up story. Was in 2008, I quit my day job because I had about 120, 150,000 in product income. And it was a bunch of, I had some AdSense sites. I had a little e-commerce site that's drop ship beach towels. It was all just
The
SEO
ultimate
and
blog.
AdWords. Yeah, it totally was. Right. And I had some info products, and then I had some software and some SaaS. And that then led me to realize, well, as SaaS became a thing, like subscriptions is where I want to be, because all my one-time stuff just kept getting smacked around, whether it lost Google rankings or whether a competitor did. The subscriptions are the best business model in the world, right? And SaaS gets it for free. So that's when I really started doubling down, talking about SaaS around about 2009 or 10. Started the podcast, Startups for the Rest of Us, and then acquired. This is the little known fact of my history: is the majority of successes I've had, not all, but the majority I actually bought, because
Really?
you can buy product market fit, people. Oh yeah. Like I bought HitTail. So .NET Invoice, I spent $11,000 on that. It made me hundreds of thousands over the course of years, changed my life completely. I bought HitTail, which was a SEO keyword tool. I bought that for $31,000 in 2011. And over the course of the time I owned it, I sold it years later, but the total revenue plus the sale price was $1 million in my pocket. And like that completely changed our lives. And then I did start Drip from scratch. Drip was probably what I'm best known for. And that was from, day one coding. So started Drip in 2012, sold it in 2016 to Lead Pages. And that's a whole story unto itself. And after that, started doing some angel checks. And then it was like, well, someone should start an accelerator for bootstrap founders. And it was like, well, who's going to do that? Right. So I was positioned to do that. So these days, like people will call me an investor, and that feels really weird to me. I'm an entrepreneur. I'm a founder. Like I've started 6 companies, 5 were bootstrapped, and like that's still how I think of myself.
I love that, man. I think so. A lot of times, like newbie sellers, when they come to us, they'll be like, why would anyone ever buy this when they can just like go start their own thing, right? Like, well, it's because of what you just said, skipping product market fit. That saves like 18, sometimes longer months, like could save years depending on what you're buying, right? So I feel like growth through acquisition is something that is like very underrated. People just don't do it enough.
I agree.
There's this, you'll probably resonate with this with your background with SaaS people, but there's this guy I met last year at this New Year's Eve party. We were hanging out at this rooftop bar, and he's a programmer, smart guy, and he was developing this learning app. I'm like, oh, cool. Like learning what? Like languages? Like, no, everything but languages. Like, whoa, okay, this is like quite comprehensive. So like, do you have like customers or whatever? And he's like, oh no, I've been spending this last year just like coding it. Like, oh, well, have people told you that they want this? He's like, yeah, a lot of my friends think it's a good idea. Like, has anyone give you any money for the idea yet? Like, have you run like a Facebook ad or anything? It's like, no. Like, well, maybe you should do that.
Yeah.
$500 of market research might have saved you a year of like coding to like kind of get your message together, right? So the product market fit, like that's no joke. That's a really tough thing to do. It's like the toughest thing in my view to do. So that's cool about acquisitions.
That's the biggest mistake that developers especially make, is they want to make, they don't want to market, they don't want to validate. And I even hear folks saying, I heard a founder who has a podcast who's kind of like having middling success and kind of always getting in his own way. But he basically was like, yeah, validation just doesn't work. It just doesn't work. And it's like, oh boy, you're saying that, because you don't want to do it. Like folks who, if you have that resistance to doing, AdWords doesn't work anymore. SEO, it's done. And it's like, no. Like I'm invested in 224 companies. I know what's working, and SEO and validation and AdWords, all that shit works. And so does in-person events and, all the stuff we've been talking about. It's different, and maybe it's a little harder these days, but it all still works.
I get people who say, oh, Facebook ads, they don't work for my company. And I always would say, like, I think it's you don't know how to make Facebook ads work for your company. I think it's a skill issue, not a platform issue usually. Like sometimes it is true. Like the affiliate site owners, they got destroyed recently with the Google updates. I'm sure you've heard a lot about it. It's affecting a lot of SaaS people too, in a little bit, in some ways too, right? So like there are some real platform risks, but yeah, in general, like that's crazy. Validation doesn't work. That's like basically marketing doesn't work. It's like
It's just
like part of it.
Preposterous. Yeah, it's really ludicrous.
Making money is impossible with SaaS.
yeah, that's the kind of SaaS doesn't work in 2025. It's like, what are you talking about? Like, you're just making up fairy tales to support this feeling you have,
Right? Yeah, that's hilarious. So to walk back, so you've sold several companies, you bought several companies. Drip, obviously, as you said, is the one you're most famous for. Is that when you started MicroConf after selling Drip, or was that before?
Started MicroConf in 2011 and
2011. Okay.
started Drip in 2012 and then sold it in 2016. So it was before. It really was like the podcast started in 2010. I published my first book, Start Small, Stay Small, in 2010, and then started MicroConf in 2011. So it was obvious that there were no events. I mean, you were talking earlier about how MicroConf is different, than other events you might attend. And the reason is because it was started by two software entrepreneurs, two SaaS founders. And most of the other events that I see starting either are started by like venture capitalists or they're started by someone who wants to make money and they see opportunity. And look, I want to make money too. MicroConf makes money, but that wasn't the original intent and that's not the gestalt of the event. And so it's filled with founders who listen to this podcast and watch my YouTube channel and read my books. And it's like genuine, generally nice people that are like actually coming to try to do something, not just to sit and pitch you and sell you stuff, which is something we don't sell from the stage, like all that stuff. So
I 100% agree. I often compare your community that you built to the DC crowd, the Dynamite Circle crowd.
Totally.
I think there's a general like similar vibe, like people are trying to help each other. Like I was at the HubSpot event in Boston and like to me as a nerdy marketer, like that was going to be the rock star event. I'd never been before, right? So I go and like there's no really good networking going on. Like they have this like mixing area where everyone's just sitting at these tables with their laptops open, talking to other people. And like, how do I even connect with them? Or like, are these just a bunch of SDRs doing demos? Like, what's going on here? Like, how do I meet anyone here? So I felt MicroConf was way, way better in terms of like the networking, like talking with people. But your exits that you did with Drip and these other companies, and that eventually led it into TinySeed. So talk to me a bit about what TinySeed is. Like, what was the goal behind starting that?
Yeah, so TinySeed is the first startup accelerator for SaaS bootstrappers. And these days we call it then, the B2B SaaS accelerator for ambitious founders. And mostly we cater to folks who are building SaaS and they don't want to take venture capital because the path has traditionally been bootstrap or VC. And look, bootstrapping, I've done it 5 times. It's fucking hard. It's hard mode. Like it's unfortunate. I don't want that to be the case, but it's really, really hard. And in fact, most of my companies along the way were I couldn't grow them fast enough because I didn't have money and I didn't know anyone who would invest in me. I didn't have a rich uncle and I was a complete outsider. Still am actually with Silicon Valley. Like I can't get on any of the main Silicon Valley podcasts because they're like, who the fuck are you? So really? That's just where it is. Yeah. Oh, totally. Nobody in that world.
Superstar in our little world.
Yeah, I don't know. Well, thanks. But so anyways, I knew that I started writing angel checks to MicroConf founders, to a handful of them. I think I have 20 angel investments personally that my wife and I've done. And these are checks between 10K and 50K. And what I saw was that bootstrap SaaS, as we all know, is extremely capital efficient. And so someone could raise a round of like, I don't know, 100 grand, 200, 300 grand. And that's all the money they need to make it way easier. And then they grow to 2, 3, 4 million and they sell for an amazing multiple. And like everyone makes out really well. So the initial inclination was like, what would YC for bootstrappers look like? Like that was what I wrote in my notebook, of how could we do that? And then I realized quickly that the money's cool, but it's actually the community and the mentorship and the advice that really moves the needle. And that's hard to convince founders of, but everybody who comes through TinySeed, as I said, we've invested in 204 companies, so 300 something founders total. Everybody, almost without exception, says the money was nice, but it was the mentorship and the advice and the community of like being in this, our acceptance rate is approximately what Harvard is, right? It's like whatever, 2% or 3%, I don't know what the number is, but it's very small. And as a result, you are in this really elite ecosystem of ambitious founders, but it's not so ambitious that they're going to destroy their lives and want to become $1 billion company. But hey, what if I sell for 30 million? And I basically bootstrap this aside from taking 120 grand, 150 grand from TinySeed. Like that's generational wealth, right? And that's kind of the goal of everybody. So it's a year-long program and we take applications twice a year. So yeah.
I think that's super cool. But what you said about the bootstrap versus VC, like I feel like I totally could see why the startup founder would be like, who needs this community? I just need the money. Give me the cash. Mm-hmm. I was talking to some friends. So I had this other lady on the podcast right before you. Her episode should be going live like a week or two before yours. But she was talking about how the first round you can lose like up to 40% of your equity, like in your seed round, right? Because the rule of thumb, you should have at least 60% by the end of that left. So you could lose up to 40%. And I always think it's so crazy to me that so many entrepreneurs are going to give up almost half of their company sometimes in these deals. Where like they're excited to do it, right? Versus like, when they come to sell their business with me. Like they're like
Yeah.
way less
hmm
excited. So talk to me a bit about how TinySeed works. Like how is it different than that deal with VC? Like
Yeah.
yes,
Yeah.
they're getting the community and stuff, but what about the exit side of that? Like what does that look like for you and TinySeed?
Yeah, for sure. Yeah, we write checks on the front side, on the investment side, we write checks between 120 and 250,000 US, and we take between 10 and 12% equity for that. And
Gotcha.
so it's similar to YC's old terms, although slightly, our valuations are lower than YC and lower than venture, because with venture, they'll say, yeah, sure, your company's worth, we'll invest at 20, 30, 40 million dollars. It's just an idea, two people in a garage. But then that implies you have to then exit for 10 times what they invest in, at least, sometimes 20 or 30. So for us, we want at least a 10x return. That's the only way we can return funds to our investors. If we want to raise another fund, we have to beat the S&P, right?
Of course.
And so 10x to 20 to 30x is also what we shoot for. So that means our valuations are usually in the 1 to 2 million, 2.5 million. And so we had a founder sell a majority stake at a $45 million valuation. And for us, and I think we invested at like a 1.5 million, probably in that range, maybe even 2. So we got like a 25, 28x return on that. And that's how we're different. That's how the model works, is that we don't expect as large of an exit. We don't push them to keep raising. I think we've had about 10% of our companies have raised subsequent funding rounds. And if they want to, and several have been venture rounds, of 5, 10, $15 million. On the exit side, they are majority shareholders. They decide when they want to sell. We've had folks sell. We've had several 8-figure exits. We've only been around for 5 years, so it's still early because SaaS takes a very long time.
Yeah.
I mean, in the early days, we invest from, $1,000 of MRR up to about 40K of MRR. So it's early stage. It takes years to grow these, as you know. So on the exit side, yeah, they decide when they want to sell. And we've had folks sell for a lot of single-digit millions and then some 8-figure exits. The interesting stat that I have on Twitter, I think it's my pinned tweet, is the TinySeed millionaire rate, which is of all the TinySeed companies that are no longer operating. So this includes ones that shut down and ones that sold. Of all those, 43% of the founders are now millionaires who were not millionaires before. So it's an incredibly high number. Now, it's early. We've only had, across our whole portfolio of 204, I believe it's around 10 companies that have either shut down or sold. So it's a very small number because SaaS just lives forever, right? SaaS is like a cockroach, like it keeps going. So the failure rate is extremely low. Maybe it's 12 now, but you get the idea. It's not like we've had 50 that have gone under or sold. But even then, that's what's happened. And it brings me no end to joy to high five a founder, next time you see him and be like, bravo, man, you earned this.
Oh yeah. Like that's one of the things I've been with you for 9 years now that keeps me going, like to get like somewhat a true exit. Like I remember this guy, he listed a business with us. Things were like 1.1, no, it was exactly $1 million was his evaluation. And he reached out to me, like I think it was like 24 hours after he went live, and he sent me a message just on Facebook, like, Greg, you changed my life. Because him and I have been going back and forth for like probably a year and a half to see if he wants to sell, right? And I was like, oh, he must have got like a really good deal. And so the next day I woke up and like, oh no, he got a like all cash deal. Like, got a crazy good deal like that. You don't hear about that very often. But that's an awesome metric, man. Congratulations. Like
Thanks.
I mean, I don't know. My guess is your millionaire making rate is probably higher than most VC shops.
I think so. I think so, because their failure rate is so high, right? Yeah. And, of course, I posted this on X and on Twitter, and, someone chimes in with, wow, $1 million. That's not as much as it used to be. And it's like, hey, fucko. Yeah. Do you have $1 million in the bank? Like, have you sold a company? Because it's something. This is not nothing. So don't minimize this. That's still an incredible number. Sure, you're not going to retire on this, but it will 100% change your life, and the inner peace and calm of being like, I have years of savings in the bank now, and I can do whatever I can angel invest my next company on my own if I want to.
Absolutely, man. I always tell entrepreneurs the start of your business is when you sell your first business. Like it just opens up so many doors that you didn't even know existed, right? I'm sure, like, I mean, you tell me, you've sold quite a few companies, and obviously Drip was a big one. Do you feel that way? Like when you sold your company, you saw all these new opportunities that just weren't there before?
Yeah, for me, I was talking with Will Schroeder. He's the owner of startups.com. And I loved this sentiment he said, because I will often say, as I'm interviewing someone on the podcast, like, so-and-so had a life-changing exit, right? And it's kind of like, well, what does that mean? And Will was like, for someone who grew up, say, solidly working class, selling for $250,000 and having that in the bank, that's life-changing. because you've never seen money like there is a comfort. And that happened to me. Like I had a low 6-figure exit, and then I had a mid 6-figure exit, and then I had the drip exit, which was, I could retire after that one. But the first one where I had 6 figures in the bank, and I don't remember, maybe it was 150 grand or something after taxes, I was like, oh, I'm set for a while. Like I still have to work, which I'm going to do for most of my life. But yeah, no, it completely changed my scarcity mindset around money, because I grew up with not very much. Like my parents, where it was always like, oh, are we going to make the rent, or are we going to make the house payment, And that was the most money I'd ever seen in a bank account. So absolutely, it changed my ability, my optionality, I think, and my willingness to become more ambitious. You know what I mean? And to put more on the table, not to bet it all, but I felt like I had a backstop at that point, because before that, if I failed, we had no backstop. And the moment I had whatever the numbers is, 100 grand, 200 grand, 300 grand, we're not talking millions in the bank. The moment you have that, and you're going to get that most likely from selling an asset. Like you may pull profit out, but it's going to take you a long time to do that. The moment you have that, it definitely is a springboard.
Yeah, it's amazing the levels to the game. I remember being in London. I met this guy, Barney Battles is his name. Real name. I thought he was like joking with me. It's such a great name. But I was talking to him about building like a media company for M&A, for deal flow, blah, 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 to eventually acquire like 8-figure companies or all that kind of stuff. And he was like, well, Greg, that sounds amazing. But why not you just go buy an 8-figure company now? I'm like, with what money? Like, oh, Greg, that's the easy part. I'm like, what? He's like, yeah, I've invested like $300 million in startups. So, he's in his 60s, had multiple good exits, but he's like, I started his own family office. Like, the money is like everywhere. It's just like, whoa, this is such a different mindset. Like, even for me, like dealing with all the entrepreneurs I deal with. So yeah, I relate to that kind of like revelation. I want to talk about, your book eventually here, but before we move on to that, I want to talk a little bit about TinySeed. So obviously they get the money, which is great. You said you had a little bit over 200 in the TinySeed portfolio. Is that right?
That's correct. Yep.
And so talk to me about like the actual community aspect and the education. Like what's happening during the 12 months?
Yeah, that's a really good question. So the first 4 months, we have what we call the TinySeed playbooks, and we have 8 different, they're kind of like talks. They're internal talks that my co-founder and I developed. And it's like to summarize it, there's funnels, there's pricing, SaaS pricing specifically. There is hiring and building your team. There is M&A and fundraising. There's mindset. There's, cash management and burn. And there's a marketing / growth one. I think I have that one tomorrow. And so that's the first 3 or 4 months, is like every other week you come to, you watch a video that we recorded, and it's stuff that I don't publish online. Like it's not just like, oh, I can get this from Rob's books and podcasts. Like it is internal stuff, and we give away the farm, so to speak, everything I know. And then we do a Q&A on it. So that's that. And then we match folks up in masterminds. And so there's small group remote masterminds. And we've funded people in like, man, I don't even know how many countries now. It's got to be 20 or 30 different countries. So it's not just US. It's not just US and Europe. We have folks in Australia. We have some digital nomads. We have folks in South America, Canada, 8 or 10 countries in Europe at least. And so we bring folks together to mastermind remotely. And then we do 2 in-person events per year. And we have a Slack channel. Yeah, Slack is actually probably the heartbeat of it, as you can imagine, because it's a really high signal to noise, because it is relatively small. It's hundreds of founders and our LPs and mentors. So it's like this really high brain concentration, and everyone is invested in people's success. And even the founders are very giving to one another. The interesting thing with the first couple batches, it was me and my co-founder, Einar, where I felt like I have to chime in on every Slack thread. I have to give advice because there's only 20 of us in here. Now a thread gets asked and advice needed, and someone's like, how do I do cold email, or how do I hook Stripe up to do blah, blah, blah. And by the time I get to it, there's like 6 answers, and all of them are legit, and it's really, really impactful. I'm not sure I understood how valuable the alumni network would become, but it happened really quickly.
So that's the alumni, like after the 12-month program.
Yeah, right? Yeah. Because they all stick around. Yeah.
Is there like a goal at the end of 12 months? Like, why do you make it 12 months out of curiosity?
It's kind of perpetual. People are just in it forever. It really is. But when we started, all the other accelerators that we know of are 90 days, right? Because YC started as 90 days. And because they're all pitch fests, right? It's all like build your deck to raise your funding. We're going to do demo day at the end, and you're going to raise funding. And if you don't raise funding, you're a failure. And we're like, no, you can't do anything worthwhile in 90 days because we're not saying you have to raise, right? Let's build your business. So then we were like, how long do we think it should be? 6 months, 12 months, and we just picked a year because it's SaaS takes forever. It's a long, slow SaaS ramp of death. So it's almost more marketing than anything. Hey, it's a year-long accelerator, but it's kind of infinity. I mean, we have folks who joined in 2019 with their first batch that are still growing, still working. So, and they still have access to everything I've just said. They can go back and watch the playbooks. They have mentor access. They have access to my office hours. They have access to the founders in the Slack. So for them, maybe it's a 6-year. It's been a 6-year accelerator, you know?
I did not realize. I feel very naive now, just realizing this, but I did not realize that these other accelerators only lasted for 90 days.
Yeah, 3
It seems
months.
crazy, and
It's
I know
insane.
that they're just focused on pitching to raise money.
That's it. Yeah.
Like,
No, every accelerator, 500 startups, Techstars, YC, they're all 3 months, 90 days, man. What can you do in 90 days other than build a deck?
that is crazy. Like,
Yeah.
yeah. So kudos on you for doing a longer time frame. Is there a specific goal that you want to help them achieve? I know like that's a very vague question, but like, is the goal in to help them find product market fit within a year? Like, is that kind of like the general like way you're growing? Or
So the majority, so product market fit is a continuum. Obviously, it's a spectrum, right? Instead, there's stages of it or whatever. Let's say it has 4 stages just for arbitrary sake, where 4 is like strong bootstrapper product market fit. And 1 is like really none to speak of. We tend to fund companies. We would prefer to fund all 4s, all stage 4s. But what winds up happening, with the deals that we get, we probably get, I don't even know what the breakdown is, but we get a few that are in the 4s. The majority, I think, are in the 2s and 3s. That's probably all are in the 2s and 3s, to be honest. So we rarely fund product market fit, although it happens, and some people lose product market fit as well. So the goal really is to help them grow. If they're at 5K MRR, we say, all right, you have weak product market fit, probably at 5K MRR. And we say, what's working? What can you do more of? Here's this mentor. Here's some advice. Go, go, go. Here's the money. Work on this, right? And we do have a goal of like, I get to X amount. Usually we talk to them, get to X amount in MRR by the end of the year, or double if you're more than that, right? If folks already have pretty strong product market fit and they already have a marketing approach or two, then we're like, pour fuel on that fire and let's get you advice on how to do that better and maybe expand that. And so it does depend on the company, but in general, it's how do we help you grow? That's really it. That's the goal. How do we grow MRR?
I think the question I should have asked was like sustainably growing product market fit. Like,
yes, that's it. That's right.
you mentioned the VCs pressuring people to like keep raising money, and then
Yep.
they get just put into this corner where there's like nowhere for them to go. Like
Yep.
they grew, they got tons of revenue, but there's like no profit.
Right. And maybe it was just all ad spend, right? They're like spending 3 times their LTV to acquire a customer with AdWords. And it's like, okay, you're growing, but you're just burning through money. Like they don't have the budget. Our companies are not doing that.
I'm curious on your thoughts on this. Like, I feel like if you scale, like you have a growth at all cost mindset, which a lot of the VC guys do, like you end up, you get revenue, you get market share, but like that doesn't solve this unsustainable mess you've created like underneath the hood. I feel like you're scaling the problem. Like you never really figured out true product market fit. You never got profit. Like, what are your thoughts there?
Sometimes it works, and it works enough that if you're a venture capitalist and you have a portfolio of 10, 20, 30 bets, it'll work out once, twice, 3 times. And that's enough. Think of HubSpot. HubSpot's a good example of this. They raised a lot of money. I'm a fan of Dharmesh.
Me too, yeah.
And I know him. Like, he and I have spoken at the same event. He wrote the endorsements for my book. Like, we email a couple times a year. He started HubSpot and they raised a lot of money and they grew unsustainably. They had a big boiler room of salespeople selling HubSpot and their unit economics were not healthy. And then they figured it out. Uber's unit economics were not healthy and then they figured it out, right? They're actually profitable now. Most companies never make it. That's the thing, is we see so many of them crash and burn, and the incentives are to grow, 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 grow. And that's the game of venture. That's the venture game. That's the game you're playing. If you're signing up for that, you raise $50 million, $100 million, that's what they need. Whereas we are like, hey, grow, 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 but do it sustainably. You have to have solid unit economics when you've only raised $150,000. You just don't have the money to burn through it. So they never get to that point.
I feel like this is why your success rate is so much higher than VCs.
Yeah. The failure rate's low. Yeah.
You figure it out before the problem becomes so impossible to wield, So one final question on TinySeed, then I do want to get into your book. For those who are seeking to join TinySeed, like you mentioned, like 1, 2, 3, 4 is like you have like very tight requirements. Like, what are those requirements? I know you take in people that are on the lower level of MRR, but what are these other traits you're looking for a SaaS person looking to join?
Yeah, so it is, as I said, between 1K MRR and 40K MRR is kind of our sweet spot. Above that, we have a syndicate that we can invest in folks, but the accelerator is that range, as well as, I mean, we take all kinds. Like some people will apply with a really high churn, for example, like 22% monthly churn. And obviously that's a huge red flag, but it doesn't mean outright that we're going to reject them. We do ask, if let's say they're growing really fast, they're an AI wrapper and they're at 10K, they went from 0 to 10K in 6 months, but their churn is 22%. We're at least going to have a conversation with them. And we're going to say, why is your churn so high? Who is churning? Is it bad fit customers? Did you have a bunch of whatever? You did a promo on AppSumo and you got a bunch of people that came in and, signed up for monthly and churn. So I would say what I look for is like, obviously low churn, high average revenue per customer, fast growth. That's amazing, but we don't fill full batches of that. There's always yellow flags, right? Because it's inevitable. And so what we try to look for is companies we think we can help. Founders who are at least a bit coachable. If I tell you, hey, I think your pricing's too low in the interview, the 20-minute interview, I like to hear if a founder fights me on that, right? And it's like, no, we could never charge more than that. And it's like, that's an interesting mindset. Or if they're like, yeah, we already know that, we're going to raise it. And it's like, that's cool. Or like, hey, that's good info. I'll think about it. It's like there's a coachability element there, right? As well as, do we think the founders are going to get the shit done? Are they founders who are like overtly negative or just like really low energy? And they're just like, yeah, I think I might grow this thing someday. I haven't really done marketing because, I don't really know how to do marketing. And it's like, I can teach you some of this. Yeah, but like you need to want it. We don't do it for you. Like we have 200 investments and I can tell you and I can hook you up with consultants. I can hook you up with mentors. We can give you advice, but you have to do it and you have to execute. And so we do look for that bias towards action of like founders who, if they tell me like, yeah, no, we just ship a lot of stuff quickly and enough of it's right that we move forward. It's like, you're the ideal founder. And sometimes probably a third of the time we are betting purely on the founder where their business is like solidly mediocre, where it's like the numbers are not great, but the founder is so impressive that we ask ourselves, do we think this person will figure this out? Do we think that they'll figure it out with our advice? And that's, a good chunk. It's a minority, but it's a chunk of companies we invest in. So having company metrics that are up and to the right, well, that tells a great story. And then, the ones that are in the middle, it's always like, do we think the founders, do we think we can help them? And do we think the founders will figure it out?
That makes total sense. And I say those as business buyers, like you'll never buy a perfect business. Like that's kind of the opportunity too. Like that is not perfect. So you got to go and hopefully make it more perfect. Right. But that makes sense. And betting on the founder, coachability would be a massive one. Like we do that with sellers. Like I had a guy, I think he had a $3.5 million business and he just would refuse to accept any kind of seller financing, any kind of earnout. Had to be all cash. Like the buyer couldn't even finance it traditionally. Like he wouldn't, I know it takes too long. It has to be 100% all cash. Like, and he was very aggressive, dude. So I told him like, well, look, man, you're never going to sell your business. Like you were going to turn off like every buyer. Like what's wrong with this business? So I feel you on the coachability thing, but let's switch gears here about your latest book. I think it's the exit strategy, right? Talk to me a bit about this book. Like what's the idea behind it? Thank you. I'll give a little promo and link in the description. So I'll definitely use Greg's affiliate link for all my audience.
Please do it.
I don't have the affiliate link, but maybe I'll put one there for this one. So talk to me about the book.
Yeah, it's called Exit Strategy, The Entrepreneur's Guide to Selling Your Business Without Regret. My wife, Dr. Sherry Walling, and I wrote it. We published it. We did a Kickstarter and then published it. Was it earlier this year? I don't even remember, but it was within the last 6 or so months. And the reason we wrote it is because they're great books on selling companies, right? You have all of John Warrillow's books. You have Before the Exit by Dan Andrews, I think is great. We reference that in the book. And there's Finish Big by Bo Burlingham. Like there's a lot of books that I read as I was selling my companies. But the thing so my wife was a clinical psychologist and now she's a coach to founders and entrepreneurs and high performing executives. And she keeps seeing like half of her clientele are thinking about exiting, are in the middle of exiting, or have just exited and are like, what's next? And so she kept seeing the same questions and the same maybe mistakes or missteps over and over and over from a more from the like internal between your ears perspective, the mental health and the mindset and the man, this is really stressful and I'm kind of imploding. And oh my God, I just sold my company and I'm worth $10 million and my wife wants to divorce me because I completely wrecked my relation. You know what I mean? It's like, it's
Yeah,
tough,
I
but
do.
it's like, this happens to people, right? And then for me, having had some of my own exits, but then walking alongside a bunch of founders who've exited, I also have this kind of experience in the trenches, seeing it, dealing with it. And so my wife said, we should really write a book on this about much more the mental side of it, the psychological, the how to sell it without regret, how to not implode, how to think through whether you should sell or not just the mechanics of an exit. Should I exit? What are the factors that come into play? And then afterwards, how do you move on if it's a big business that maybe you spent 10, 20, 30 years building? We know it doesn't have to be, but like, what if? What do you do from there? So that's really why we sat down to do it, was to fill, I would say, a small gap in the market that we saw on this topic.
I actually think this is a very important topic. Like most of the time when, my friends come to me about selling, I'm usually not talking so much about the multiples, but more about the psychology of it. Like for one reason, a big reason sellers tend to overvalue themselves is emotional
Mm-hmm.
equity is what I call it. Because like
Mm-hmm.
this business changed your life utterly, right? But like the buyer's not going to view your P&L in that same kind of way. So you gotta like kind of like expectation setting,
Mm-hmm.
going in, right? I often joke is like postpartum depression, like entrepreneurial depression.
Big time.
We always use the metaphor like it's my kid, my child, going out
Yep.
to school to a new owner or whatever. But
Yep.
so talk to me a bit about like some of the psychological things that you and your wife have seen with entrepreneurs that are exiting.
Oh, yeah. I mean, so I tell you, the book itself is broken down into 3 sections. And I think the book is 270 pages, but it's about a third before. Like, why is it so hard to think about selling your business? And when is it time to go, and then kind of setting expectations. And then the middle section is really you're selling, you're moving forward. How do you think about it? How do you not implode? And then the last section is moving forward. I tell you, we see a lot of the mistakes are made after the exit. If you
Really?
want to know the truth. Yeah.
Let's talk about that. Like
Yeah.
how so?
I mean, we've seen people that like as their business is going to close and they're going to have all this money, they're like buying their next business already. And it's like, oh no, you need to take time off, especially if you have any type of money in the bank. Like, take time off to find out who you are now. Like, you're a different person. You may not want to be an e-commerce site owner anymore. Like, give yourself 6 months to just chill and relax and like re-engage with your family, because it's probably been really stressful for you, or we've seen folks spend stupid amounts of money booking some big celebration vacation before the deal closes.
Mm.
So it's going to close in 3 weeks. And, the founder tells their spouse, like, let's go to Cancun and drop $30,000, on whatever we're going to do before it. So it's things like that where it's like, oh, don't get ahead. No, let's just set expectations that most deals don't go through. It's great if yours does, but like a lot of deals don't. So like, don't bet too much on that. And then another one really is getting too tied to your business emotionally, which all of us do. I only ran Drip for 3.5 years before we sold it. And I was tied to the business. So I would like really, my identity was quite tightly to it. So imagine running a business for 10 or 20 years, how that's going to feel.
Oh, 100%. And that Cancun one made me laugh because I always joke like, dude, like a deal dies 3 times before it gets done. Like that's a common like
Yeah.
joke in the world of
Yeah.
M&A. It's just like it's
Yeah.
expected. Someone's blowing it up.
Yep.
Money
Yep.
it's not done till the money's in, right?
Yeah.
But the other thing you said, I agree, man. I often joke that humans were creatures of tomorrow. So if tomorrow ever becomes today, we're kind of screwed because like, oh no, what do I do now? And I always say to my entrepreneurs who are looking to sell, like, well, what's your personal and your business goals afterwards? And usually it's like, I want a bunch of money. It's like, well, no, no,
Mm-hmm.
no. Like, what do you want to do with it? Why do you want the money? Right? Like, what's your personal goals? Not related to anything business. Because,
Mm-hmm.
yeah, it's good to like have some time to go and do those things. Like, that's the reason why you work so hard, right? So I'm glad that's in the book. I think that's super important. With timing the sell, like, what are you recommending there? Because you brought that up a couple times. Is there like
Mm-hmm.
some kind of psychological like signal, like go you must do an exit now? Like, how does that work?
Yeah, we really break it down. Well, I mean, there's the logistical one of like, hey, don't run it over the top. Like once you plateau, your multiple plummets, right? We do talk about that. But
Yes.
realistically,
Okay.
right, which is age-old advice. And it's like, how do you know when you're going to plateau? Well, at least with SaaS, there is a formula, right? It's new MRR per month divided by churn, and that's when you're going to plateau if you don't do anything different. So you can at least project when you might plateau and then get ahead of it. But we also break it down into like external cues. And I'm kind of reading from the table of contents here, but you've built something amazing and you're ready to let it go, right? Some people do that. I was a little bit like that with Drip, where it's like, I just don't want to we were at 10 employees and it's like, this is not fun. I don't want to manage, I talk about building like it's stages. When you do this, you build a product, then you build a business, then you build a company. And I was at the company building stage because we were in low 7 figures ARR. And I was like, this is not interesting to me anymore. Like it was fun building a product and then getting it to be a business, but like I'm going to hire managers now. Is not great. So it's like, that can be one reason you build something amazing. Another one is the business needs more capital, right? And you may want to raise funding or you may want to take money off the table and hand it off to somebody. We do talk about partial exits as well, like growth equity and that kind of stuff. This book is not all about SaaS, by the way. We interviewed 15 or 20 entrepreneurs, and actually most of Dr. Sherry's clientele are not SaaS founders. And so it's folks who there's like agencies and consulting firms. There are folks, I think there's an e-commerce website person. There's someone who owns there's several brick and mortars, clothing brands, and then there is SaaS, but it applies to all. And another external cue could be like a change in your life status, right? It's like some people find out they're ill, like I have cancer, and then they're like, I need to sell, or like my wife or my husband, or my dad or something, like stuff change. You have a kid, you get divorced, whatever, like there's all types of stuff. And then sometimes it's an internal cues. That's the other category, right? Of existential restlessness, wanting financial freedom. Your interest levels change in the business. Your energy level changes. What happens if you start a business when you're 40 and now you're 55 or 60 and you're kind of like, I don't want to do it anymore, right? So we walk through all those. That's just a sampling.
I agree with pretty much all those points as like major factors. So I don't think I have too much to add there, but I'm curious. We talked a little bit about the negative of the post exit, right? Like the Cancun guy, who didn't exit yet, but talk to me a bit about people who exited and what did they do that, turned out very, very good for them to do.
Yeah. Like what are the really smart choices? It's a really good way to think about it. There's a couple stages after you sell, right? If you wind up working for the acquirer, and it depends on the exit type, right? But if it's a strategic, you're going to work for the acquirer. We have a whole chapter on that because it really is kind of a skill set, I think, to say, I'm going to be here for a year or two. How do I make the most of it? How do I not make it prison time? What can I learn from this? How can I build out my network for the future? And folks who do it well think that way about it, right? Rather than this combative, like, this is going to suck. I'm just going to grind it out. You can do that, but like, how do you make the best of it? But then post exit, and when you're totally free to do what you want, really, we talk about taking some time off. And this is a big mistake we see some founders making where it's like, I have to start the next thing. I have to start the next thing, especially folks who sell, let's say you sell for $500,000, you have $500,000 in the bank, right? You're not going to retire on that. So then you feel this urgency. I got to start something. It's like, you really need to take some time off. The founders who do it well, they let it settle and then they really do ask themselves, what do I want to do next? And I myself did this after selling Drip because I was at the stage I could never work again if I wanted to. And I was really burned out on SaaS. I was burned out on startups. I was even burned out on MicroConf and the podcast at the time. And I thought pretty seriously about walking away from all of it. We actually got a low 7-figure offer to buy MicroConf and the podcast. And I was like, oh man, it would be so nice to walk away and not think of any of this stuff. And I took 6 months off and I went on a founder retreat, which was just me for 2 nights because we have kids and, getting away and to be totally on my own, almost a silent retreat. And I thought a lot about it. And I realized my legacy of what I'm going to do for the rest of my life, I've been doing it for free and as a hobby for the past 10 years, which was the podcast and MicroConf and, what became, my next book. And it was a real enlightening moment for me to be like, I am recommitting to doing all this stuff. I'm not going to walk away and start a tabletop gaming company like I was planning on. That was literally what I was going to do, was like start
Warhammer competitor?
board games. Well, like board games and, solo games. And yeah, I mean, I'm really into them. And I was like, that's what I'm going to do. That's what I'm going to do for the rest of my life. And if I had made a snap decision, I would have sold those things. That's a one-way door, man. That's a big mistake. So I feel like I did that one well. And the founders who we see doing it well, like really are deliberate about thinking, what's next? What should be next? taking outside counsel of like, talk to your mastermind, your co-founder, your spouse, your therapist, whoever you have in your life of like, where should I go next? Like that usually is a big thing. And then the other thing is don't spend money stupidly too fast. Don't go buy a Porsche the first week. If you want to buy a Porsche, just let it breathe. A lot of this is just let it breathe. Your life is changing. Let it breathe.
And for all the fans out there who are also into tabletop games, maybe don't go buy a Warhammer army either. That will bankrupt you.
Quickly. It'll drain you.
Throw yourself a figure exit buying some Adeptus Custodes. I'm a huge Warhammer nerd.
Yeah, totally. My oldest kid is into Warhammer, and it's like, oh boy, that's really expensive.
Yeah. When I was a kid, we'd always use printer paper because we couldn't afford them. So just like, this is a Space Marine. But
yeah.
Anyhow, I think that's all great advice. I want to double click on a thing you said though. So two things, like the burnout, like maybe you didn't, but like how did you help like reverse that kind of burnout? And then the second part of the question would be for those entrepreneurs who, and this, like a lot of entrepreneurs pretty neurotic at times. Like we're pretty manic people because we're very passionate, like wanting to go do things, but how do they disconnect like from that like current that's always pushing them? I feel like that's a big problem.
Yeah, big time. So the way that you get around burnout, usually it sucks because you don't want to hear it, but you have to change the pattern. You have to step away from work. If you're really, truly burned out, not just like, oh, I'm bummed. This sucks. I don't like my work. That's different. Like burnout, clinical burnout is when you have these ingrained, entrenched pathways in your mind and you're just looping and perseverating. And it's like, it's completely brought you into this place where you're almost non-functional. You have to take 6 or 8 weeks off. That's usually the prescription. It's like take a lot of time off and completely step away from that. So I didn't have that luxury. After I sold Drip, I had a 1-year commitment to work at Lead Pages. And what I did, I couldn't step away completely. I did take some time off, but I did dial back on the accelerator. We actually talk about this in the book a little bit. It's like you as a founder working at like 70%, you're still going to be better than most people in any organization. And just back off a little bit, care a little less. It's hard, but it's like, take your foot off the accelerator. And I did. I probably worked at 80% capacity for like several months because I was just like, I need to care a little less about everything and I have to let it go. And then once I did wind up leaving, I took, as I said, 6 months off completely. And all I did was like play my guitar, listen to old punk music, and like bought a bunch of tabletop games. So I did spend like $1,000 on all these. I was just like, I've never had so much money in my life. I'm spending all of it. And it was great.
15-year-old dreams have come true.
100%. And I have no regrets about that. I loved that time. I have such good memories. I had no calls for 6 months. So that's how you do it. Now, day to day though, your question is, how do you get around just burning out in the first place, right? There's a couple things. One is to figure out how you turn it off in a way that's not alcohol or THC. Like you have, without numbing, how can you turn off thoughts really hard in the evening, right? To come home and whether you have a spouse or kids or significant other or not, how do I turn this off? So you have to find something that isn't work that brings you joy, because otherwise you're going to fill it with work. I've been there. You're just going to fill it with more work. There's always more work to be done. So do you have a hobby? Do you lift weights? Do you play the guitar? Do you play Dungeons and Dragons? Like, what is it? Do you listen to audiobooks on fiction, not business books? Like, you have to find something that allows you to switch it off. So that's my first piece of advice. The second thing is figuring out at your day job, which is your company, start making a list of all the things you don't like to do. Everything that you do that doesn't bring you joy, and then try to figure out, is there a role? Usually it's like operations manager, director of operations. There's a reason that like with TinySeed, our second hire, I believe, was a director of operations, because a director of operations is just the person you give everything you don't want to do to. That's really what it is. And if you have the budget, and this is why Yep, that's right. And that is a way to avoid burnout. The reason I've never been burned out again since 2016, 17, selling Drip. And in fact, I swore that I never would again, which is an interesting, bold claim to make. But I was making a commitment to myself of like, if there's a bunch of stuff I don't want to do, I'm going to hire someone to do it. And if I don't have the money to hire someone to do it, I'm just going to shut the business down. Like, I'm not going to do this, And so that's another thing, is I think it's hard sometimes to justify making an internal hire like that doesn't drive revenue. But if you burn yourself out, you're not going to drive revenue either.
Yeah, I think it's so easy for entrepreneurs, for a lot of people to burn out that I really care about going. So here's a same question in a different vein. I'm curious on your thoughts on this. So we described how a founder can do that. Like just hire someone if you put your director of operations. But how does the director of operations do that? Like critically important person for the company, right?
Yes.
And I'm sure you've seen this too. Like founders, again, manic, neurotic, ambitious, let's go. They can cause the burnout in the employee, though they don't like usually that's not their intention, right? And so how does the employee handle that in your view?
You have to hire people where their zone of genius and where they get their juice and ignition and feedback and dopamine from is exactly the tasks that you're asking them to. So our director of operations has a very different personality than I do. My personality is I like shipping things into the world and having people react to them. That's my top thing that I love. So that's why I ship 52 episodes of a podcast a year and 26 YouTube videos a year. And I'm writing a book every 18 months right now because I love all that's painful to create. But man, when we put it into the world and people tell me how much it changed their life or how much they like it, I'm like, this is it. That's all I want to do. I don't want to do email. I don't want to look at spreadsheets. And I do those things because I run 2 companies, but like, I don't want to talk to bookkeepers and accountants and talk to founders about their K1s and how they have to, you know what I mean? Like I want to put things into the world and give advice to founders too. That's fun. Our director of operations, I asked her at one point, I was like, so should I interview you on the podcast? And she's like, absolutely not. I don't want to be on camera. I do, right? It's like, yeah, she is the opposite. She loves just working quietly in the spreadsheets. Hey, can we run an estimate of fund 3 and how the numbers are going to break out? And she's like, happy place. Puts it Spotify on. And so that's it, right? So unless we were to push her to like work 50, 60 hours a week, which we don't, she should be getting juice and feedback positive from that. But you have to find someone who that's their thing, that they're type A about the things that you're not, in order to avoid that.
I think that's fair advice, especially since entrepreneurs are in a weird position where they're doing like a bit of everything all at once, right? Yeah. So versus like a job is more constricted and confined. I would say from my perspective, I started off as just basically a writer for EF before becoming the head of marketing. I would say what was most helpful for me, like, is recognizing like, wow, I have like really bad ADHD, but I'm highly creative. Like, so when I hire people to work with me, I try to hire people with like very orderly minds, like keep my tornado in check, which has been helpful for me. But we're coming up at the end of the podcast and I want to get into the rapid fire section. But before I do that, what would be, from all your experiences, like, because you've had a very wide variety of experiences at this point, from your books, conference, and so on, like, what would be like a piece of a healthy mindset shift or insight that an entrepreneur could take and like apply to their business? Out of all your experience, what do you think would be the most important?
I think the founders that I see succeeding, the biggest difference between them and the ones that don't is they make asymmetric bets and they make a lot of them. And what I mean by that is they work on the things that matter and they figure out what is the number one thing that is bottlenecking this business right now. And they use some gut feel and they ask advice, talk about coachability. Then they go after it and they do it quickly and they do it effectively enough. And even if it doesn't work the first time, so it's like a new marketing approach. Well, which of the 20 B2B SaaS marketing approaches should I do? They ask advice, they talk to me, they talk to a mentor, they make a list, they have all 20, and then they start ranking them. And then when they figure out, I'm going to try this one, my gut feel is it's this one, and my analysis is this one, then they execute pretty maniacally on it. And they go, and they spend 3 months. And if it's working, then they pour fuel on the fire. And if it isn't working, then they cut bait and they do the next thing. And they pivot during that time too, right? It's not like they're doing the same thing over and over. That's the mindset that I have adopted and I didn't used to have, but it's to do the right amount of analysis and then stop. Do a lot of things quickly and see them through. Don't half-ass them, because I do see founders being like, well, I tried, to our point earlier, I tried SEO and it didn't work. I tried YouTube and it didn't work. This stuff doesn't work in 2025. And it's like, no, you half-assed it. You didn't actually do it. I have 2 founders and it's like Goofus and Gallant from the old Highlights magazine. It's like, I see founders just cranking on things and everything they do works. And then this other founder, it's like everything you do is kind of half-assed and you trip over yourself all the time. Well, why is that? It's not luck. It's not, you know what I mean? It really is this mindset of like, I'm going to push on things. And the asymmetric bet I've talked about was you're pushing on things that if they work out, really move the needle. It's not things that like, oh, if it works out, it's a nice little half thing. It's like, no, this is up and to the right. Right. And so I think that's a lot of stuff, but that's the mindset, is like, do a lot of things quickly, Most of them should work. And if they're not working, figure out how to make them work. And if they're not working, then cut bait eventually. But like you do it and you see it through.
I think that's great advice, because businesses, at the end of the day, like, you're the owner of it, at least. It's an asymmetric machine of leverage, right? Like, as you keep doing this, you eventually, if everything works out, right, you eventually get to a point where you are grossly overpaid for the amount of like time and effort you're putting into the system,
Big
right?
time.
You built
Yeah.
a good machine. So I think that's very solid advice. All right, well, we're at the end of the podcast here. So I have 3 rapid fire questions for you. You give me just, 3 rapid fire answers. Are you ready?
Let's do it.
All right, let's do it. No pressure here. What are the best hidden growth opportunities in your view when it comes to the world of SaaS?
I think most people don't check out Capterra and G2. It seems to not be talked about that much, and we have some founders really making it work. And when it works really well. That's
Drive leads,
probably
I assume, right?
drive leads. Yeah, you have to pay to play and on G2 and Capterra and whatever else. There's another one, but I forget the name of it. No one talks about that. And the founders who I have making it work, it's like, wow, that cost to acquire is crazy, crazy low, crazy lower, because they're really qualified leads.
Oh yeah, people on those captured audience.
I mean, I tell you what, I don't recommend audience building for SaaS, like to truly be like social media audience. It's like, it just doesn't work, but we have some founders who have started YouTube channels, not for the audience, but for the search. And their videos get maybe 300 or 400 views. So it's not this huge subscriber base, but they're highly targeted at these search terms. And then they wind up appearing in Google and the top 2 or 3 because they're video, and they close way more deals than I would think out of that. So it's something I'd consider. Now, here's the thing. Every marketing approach, usually you're like, I don't build an audience if you don't want to be in front of a camera. Just don't stretch it, right? Don't force it. That was not a rapid fire answer, but I will stop there and we can keep going.
I'm trying to constrain myself because I have
I know totally we can go back and forth. I know. Yeah.
Like, I actually was in Cyprus, and this lady gave a whole speech on personal branding, and I was on this panel. This guy asked me, like, what are your thoughts on personal branding, Greg? You got a brand? And like, I don't. Like, I have a micro one with EF that was completely on accident. It wasn't my intention. And I just basically said, like, well, if you want to build a big business, you don't really need a personality brand. You don't need a personal brand. Like, what? Absolutely. The lady on the she was really upset. Like, well, what was the personal brand of IBM?
No. I looked 204 SaaS companies in TinySeed. Dozens are doing 7 and 8 figures of ARR. Like, by all measures, the companies are mostly, wildly successful. And less than 4% of all of them had any type of personal brand or have a personal brand these days. Like, less than 4%. So 96% of our companies are just, you've never heard of the founders and you don't need to know. You can go to tinyseed.com/portfolio if you want to see the list. They're just doing it with marketing approaches. Like, don't believe the hype that you have to build some type of audience to start a business. Now, if you do info products and courses, build an audience.
Sure.
But if you're doing SaaS, don't.
Yeah. I'm glad to hear some real data on how I think personal brands are somewhat overhyped. All right. The second question, you actually answered 2 of the rapid fire questions at once. So good for you. Your forecasting knowledge. Second question was tools and resources. So we'll jump to the third one here. And this is the hardest question, so feel free to take a deep breath as you try to answer it. What has been your funniest moment since you got into this whole crazy world of SaaS, investing, and growing startups?
That's tough. I laugh a lot. I like joking around. And so there's a lot of funny moments. It might be at MicroConf 2 years ago. I'll just pick one. 2 years ago, MicroConf, we're in Denver, and I'm co-emceeing with Leanna Patch, who is a conversion copywriter and a comedian, actually, a stand-up comedian, improv comedian. And we're emceeing and we're talking, and she starts giving me crap. She says she wants to, I was like, well, go grab the prize. We're going to give it away. And she's like, oh, what? The patriarchy's alive and well. And she starts giving me crap. It's a big joke, and we're all laughing. And she falls off the back of the stage as she's saying this. And you can hear it. Cluck. Oh, fuck. You hear it in the microphone. And then she stands up and she's like, nobody saw that. Don't tweet about this. Or, it's just this really funny. And I'm like, Anna, are you okay? Like, the reason it's funny because she was fine, but we have it on camera. We have it on audio, and it is hilarious. And I put that audio at the end of one of my podcasts, and it just, it's so funny. So that was definitely, I still to this day laugh about it.
That's a great soundbite. Bye.
Yeah, it really is. It was great.
Oh, that's great. Well, man, it's been an absolute pleasure talking to you and reconnecting with you, man. It's been a lot of fun. For anyone that wants to pick your brain or learn more about you or what you're doing at TinySeed, like where should we direct people?
I think, if they like audio or video content, they should check out Startups for the Rest of Us. And that's the podcast I've been doing for 15 years, 52 weeks a year. And I talk about all that kind of stuff. And then really the hub for me on the internet is just my name, robwalling.com.
We'll put all those links in the show notes. So I highly recommend anyone go check out Rob. Great guy. And Rob, thanks for being on.
It's my pleasure. Thanks for having me, Greg.
There you have it. I hope you enjoyed it. I hope it got you inspired at all the different things that are happening in this industry. And of course, if you just want to buy a highly profitable business, you can always go to empireflippers.com/marketplace, or maybe you want to make an exit of your highly profitable business, and you could go to empireflippers.com/sell-your-site. I've been your host, Greg. If you enjoyed this episode, make sure you leave a review, give us a like, a follow, share it across social media. Talk to you all soon. See you on the next episode.